A new year just started, and with it, thousands of new businesses are launching right now. New ideas, new LLCs, new side hustles turning into full-time income. But here's the truth most startups don't realize until it's too late. Businesses don't usually fail because the idea was bad. They fail because one, lack of coverage mistakes wipes out everything early. For example, a customer trips, a laptop gets stolen, a contract requires coverage you don't have, a claim hits before your business ever finds its footing, and suddenly the business you started is already behind. Today, I'm going to walk you through business insurance basics and how every startup must understand what actually matters and how business insurance builds on itself. But most importantly, how to start your year protected, credible, and ready to grow. So let's get started. How business insurance really works, the big picture. Before we talk about individual policies, you need to understand one critical concept. Business insurance builds on itself. It's not a random process, and one policy doesn't fix everything. It's a layered system where each coverage supports the next. At the core of that system is commercial general liability, which is a foundation. Everything else either attaches to, builds on it, or depends on it. If the foundation isn't solid, the rest of your coverage doesn't work the way it's expected to. So let's start exactly where every startup should, at the foundation, commercial general liability insurance. Now, commercial general liability is usually the first policy every business needs, regardless of size or industry. It helps protect your business if someone is injured because of your operations, you damage someone else's property, you're accused of personal or advertising injury. Here's something most startups don't realize early on. Most landlords, vendors, venues, and contracts require proof of general liability, typically $1 million, $2 million. This limit isn't arbitrary. It has become an unofficial industry, and it signals that your business is legitimate and prepared. General liability doesn't just protect your finances, it opens doors to contracts, leases, and other business opportunities. Once that foundation is in place, next is protecting the physical side of your business, which leads us to property coverage. And you have two, business property versus business personal property. When people hear property coverage, many startups assume it's one thing. In reality, property insurance has two separate components, and understanding the difference matters. Both fall under property insurance, but both protect in different ways. Let's start with property insurance. Protects the building your business operates from if you own the building. It covers the structure of the building, walls, roof, floors, and permanently installed systems. The rebuild costs if the building is damaged by a covered loss like a fire, wind, or vandalism. This coverage is similar to dwelling coverage on a homeowner's policy. In the end, if your business owns the building, this coverage allows you to rebuild the building if damaged or destroyed. It's important to note, if you lease your space, your landlord typically carries this coverage, but that doesn't mean you're fully protected. Which leads us to what you have inside the building. Business personal property. What property belongs to the business? This is where many startups are exposed. Business personal property covers the items inside the building that belong to the business, such as laptops and computers, office furniture and equipment, tools, machinery and supplies, inventory and materials. Now, what does this mean? Even if you rent your space, you are still responsible for insuring business personal property, not the landlord. For example, if there's a fire, theft, or water damage, and you don't have business personal property coverage, you will be responsible for replacing those items straight out of your pocket. But physical damage isn't the only risk startups face. Lawsuits don't always come from accidents, which leads to professional liability. Essentially, if you work for yourself and your business involves providing advice, offering professional services, consulting, coaching, or planning, designing, managing, or delivering expertise, then general liability alone isn't enough. The goal of professional liability, aka for some, errors and omission, helps protect you if a client claims your advice caused them financial harm, you simply made a mistake, you failed to deliver as expected. Why is this coverage important? Even if the claims are unfounded, the legal defense costs alone can hurt a startup, especially early on. If your business uses technology, which most do, there's another risk that has grown rapidly, cyber liability coverage, especially for today's modern business. Cyber liability has become one of the most crucial coverages for business today. Criminals are no longer just targeting large corporations. Hackers are actively looking for small businesses and startups because they often have fewer security protections with valuable client data. Cyber criminals aim to steal clients' names, emails, and phone numbers, payment and billing information, social security numbers or personal data, login credentials, and financial records. And it only takes one phishing email, one compromised password, one hacked device to prevent a business from facing further serious consequences. Cyber liability insurance will cover data breach investigation and response, client notification and credit monitoring, legal fees and regulatory expenses, ransomware and system restoration, lost income caused by a cyber event. If your business stores client data, accepts payments, or relies on email and cloud systems, cyber risk exists right now. Cyber insurance isn't about fear. It's about how business operates today. Now let's talk about what changes when your business starts adding employees. Workers' compensation and compliance. That's what we need to focus on. The moment you hire an employee, even part-time, your responsibilities change. Workers' compensation helps cover medical expenses for workplace injuries, lost wages, employer liability protection. Each state has different requirements, and failing to comply can result in fines, penalties, or denied claims. This is an area where startups often get caught off guard because compliance is part of risk management. Now, the good news is many of these coverages work together efficiently. Bundling coverage the smart way. Many startups qualify for a business owner's policy, often called a BOP. A BOP typically bundles commercial general liability, business property, business interruption, and usually more cost-effective, easier to manage, and designed for growing businesses. As your business evolves, additional layers of coverage become more important to add, like professional liability, cyber, or employment practice coverage. That's how business insurance is meant to evolve over time. But the most important factor is you're not alone in this process. I have an entire video series dedicated to business insurance. Each video breaks down a specific coverage in plain English so you can understand what you need, when you need it, and why it matters. If you're starting a business this year, this series can help you avoid costly mistakes from the start, which means start the year protected. Starting a business is exciting. I know, because I have a business myself. But to keep the business alive, you must protect it. The goal is not about buying every policy. The goal is to start with the right foundation and build the coverage in the right order. That's how you protect your income, your reputation, and everything you work so hard to create. Now going forward. Now, if this content was helpful, please share it with someone who may benefit from this topic. And don't forget to like and please subscribe to the channel. But don't stop here. Check out the next video right here for more insurance and financial tips. And as I like to say, call Jay today. Thanks for listening.